overall last week we saw a gain of 3.5% for the Nigerian market. We've had quite a few banks now reaffirming the fact that things could be looking good for the year ahead. Are you convinced of this confirmation that has come through from some of the earnings?
Yeah, we've actually seen significant increase in the ASI week on week, and this is on the back of the good results we've seen from most corporates, especially the banks. And as you know, the bank controls a significant portion of the market. With these strong results we've seen in the market, it has actually boosted confidence back into the market, and we've seen investors that are actually creeping back into the market and picking up stocks at very cautious level. The Q1 results also released into the market by some of those banks like the GT and the UBA, GT Bank and UBA came out strong, and they were quite good, and this has also helped in improving confidence in the market, and we've actually seen this increased interest in the market with buying interest and little sales from the side. But yesterday we saw quite some profit takings from some quarters, which is much expected after a 5-day rally in the market. Yeah. We might see profit taking continue in the market for some few days, and this will slow out and the market stabilizing. Going into the year, we expect that if these corporates continue to give good results like this, we might see the market recovering soon.
Let's just touch on what you mentioned on the UBA numbers, because full year numbers were not that great. First quarter numbers looking far better. And also when you see what happened on the GT Bank front as well, pretty much a very similar scenario that could be playing out. So are you saying that the negativity is well behind us now, and the numbers that we can expect going forward from these banks are going to be looking good? Because we know that fees are growing rapidly with all the banks as a whole, if you look at the combined number.
Yeah, looking at UBA, the full year result was not encouraging at all, and they actually gave a profit warning initially that they were going to make a loss, and we saw them make over a 9 billion naira loss. But from there, we saw the Q1 result, and it was quite positive with an ROE of over 30%, and this was quite encouraging, meaning that from this we can see that they've actually come out of their problems and they've returned to profitability, and we expect this to be sustained into the market. And with this being sustained in the market, I guess it's all the way up for them. For GTB as well, good full year results, good Q1 results. If this can be sustained into the year, to the end of the year, we expect at least a minimum of 25% ROE from them, and this is a positive one for them, and all we just expect is positive, and this will drive the markets on the positive note.
Idris, if you look at all the new information that has come through of the 9 listed banks in aggregate, it's interesting that non-performing loans falling to around 5%. Is this a number that you're comfortable with?
Non-performing loan over 5% is quite cool, but it will be better for them to reduce them, because the lower the better for the market, and the lower the better for the banks as well. So if they can reduce their non-performing loan to the barest minimum, even lower than 5%. 5% is still a comfortable level, but if they can reduce it better than that, I guess it's a good one for the market.
What about the end of the year provision charges? It seems that this also making a few investors uncomfortable. Is it making you feeling slightly cautious?
Yeah, from trend, what we've seen with these banks is they up to Q3, they release positive results, and we expect them to add this into the full year. But on Q4, we usually see that they make provisions for loan loss, and this actually reduce the run rate expected by investors in the market. But from what we've seen so far, I believe the banks should better manage their books in such a way that their loan provisions will be at the barest minimum. And if they can do this, I believe this will strengthen confidence. And looking forward into the future, we believe the markets will stabilize and do good.
Idris, I mean, the banking sector up almost 10% last week. Would you be buying into the indice, or would you be buying into specific banking stocks to get exposure to the sector?
Looking from my own view, I'll diversify my portfolio, but the banking sector being the most active sector in the market, I think I'll play actively in the banking sector as well, but with a diversified portfolio.
Idris, if we could just touch on, okay, the PIC, Africa's largest fund manager, acquiring 20% in Ecobank for $250 million. What is the investor community thinking about that? I mean, this is obviously a very good development, because it just shows that we're starting to see pension funds wanting exposure to African banks.
Well, with investments into with that investment into Ecobank, I think is a positive one, because it means there's confidence, and they have confidence in them, and with such confidence in such bank, it means that there's more money for them to play around with, and at the end of the day, it should lead to profitability for the bank and increase their earnings. and this in long run, and this should have a positive trickle down into the markets and the share price as well.